Hey everybody, and welcome back. Well, they say if you can't beat them, then confuse them. And that's certainly what the market is doing right now. It's confusing many retail traders out there. But could we be seeing a turnaround in certain risk on assets? Do we have an inverse head and shoulders here forming on the S&P 500, which will lead into stocks, commodities, and potentially cryptos? Let's discuss that and more right now. Heaps to talk about. See you soon. Welcome back everybody to the Daily Show here, where we talk about markets across the world and the implications of what the last session did to the next few days and the next few weeks. This is for the markets close 16th of May 2022, and as you can see on the Fear Greed Index, we're still in extreme fear in terms of the general market sentiment. Let's move over to what actually happened in the last 24 hours, see if we can glean any information off this. And straight away you look at this chart, you know, okay, healthcare did well, energy did well, and technology and financials obviously were not the favorite of the day. Specifically, Tesla took another really bad beating on the session, and we've got some kind of warnings on Tesla a little bit later when we talk about it. Let's think about what happened in the market. Now, we do live streams here every Monday open for the public, and we had a great session where we talked about defensive zones, and we specifically had a big defensive zone on the S&P 500 that was defended early in the session during the retail hour, defended again later on, and ended up leading to a pretty good day trade if you were looking at it. So remember to go back and have a watch of that, and also subscribe if you want to see more of that live content. And if you're interested in more live content, we do have a private community where you can access that. But let's talk about these movements. So it was basically pretty flat. In general, this is what we call a consolidation day. There are day trades to be had, but in general, it overall is consolidating, forming what could be a right shoulder on the S&P 500. The sectors where, as we mentioned, some of the old ones came back out: energy, agricultural stocks, gold coming back up, healthcare, consumer staples, mostly defensives, metals, etc. These were the sectors that did the best throughout the session. It doesn't really tell us too much about whether the market was prepared to take risk on or off at that stage, though. It was just kind of consolidating, as we mentioned. Let's talk about bear markets. So bear markets technically are found when you have over 20% down in a market. That is, the Nasdaq is currently in a bear market technically. The S&P 500, the most important market to be looking at, just about hit it. As we know, it hit in that 19 and a bit percent, didn't quite hit 20 and then rebounded, which we suspected on the channel last week, and obviously you guys did really well there. Now the question is, do we recover? Well, we've got some great zones to look at for the Nasdaq and the S&P 500 moving forward, but as long as we hold this 20%, in general, well, there is a chance that we don't have a recession. And obviously, if we don't have a recession, I know a lot of you said, Tom, we're already in a recession. Come on, man, what are you talking about? Well, let's hope we don't. And the technical market is saying still at this stage, we don't. There are chances for really good recoveries. Most of these times when this has happened, when we don't enter full recessions, the markets go into serious gains over that period. So although 2022 is going to be a very tough year, that's something that's important. I think it's important also to put things in perspective. Are we in a rip-off market anymore? Well, here is a good chart that shows 12-month PE ratios. Now, obviously, you can talk about Shiller, you can talk about medians, and there's no doubt that in the days of quantitative easing, and we still have a lot of money pumped in the system, remember, this is still expensive. So you can see here, by the average, we're currently starting to sit back down to the 10-year averages on many of these indexes and many of these sectors. So the financials kind of fairly priced. Energy obviously underpriced to where it was in the past. And then we have here quite a lot of sectors that are starting to come back down to more fair values, if not fair values based on their 10-year history. So you might say, well, the market's been rip-off for 10 years. This is time and it's overdue. I just want to point this out for people that are looking at the market. It's also worthwhile thinking about S&P 500 forward 12-month PE ratios as well, because we're coming back to a point now that's really back to where it was here in 2014-15 in terms of forward PE. So is it expensive? Yeah, it is still. I mean, obviously you would prefer to pick markets up around in this area, which is a no-brainer in comparison, but that's not where we are right now. We're sitting at really more of that kind of area where you expect maybe some buying to occur, and you don't want to be up here at the extreme, but you also don't want to be too low, because at that point you're starting to go, okay, well, the only way I'm going to get prices like this usually is going to be a recession or a serious pullback. So the markets aren't as rip-off as they were a few months ago. We also want to look at the stats, and we looked at those over the last couple of weeks, and this is how we found the bottom in the market, at least for now. The idea was that markets don't tend to sell off for more than 6 weeks in a row. That's what we saw. So it becomes more likely that we get a bullish week after those kind of periods. And that's what we're currently seeing. We're currently seeing a little bit of hold. Potentially this week, the market tries to go a little bit bullish because 6 weeks down is an extreme amount. It's very rare, and it's only happened this many times throughout history, really, in terms of the 50s and World War II. There's not that many times it's happened, and you can see 6 weeks down was the average, which is what we just reached. Earnings beat data, we're getting into the back end of earnings season right now. 1,397 beats, 634 misses. Obviously, forward guidance is the most important here, but in general, beats rate 69%, still pretty okay here for the back end of the season, and it shows that the general earnings weren't too bad in the US. Obviously, forward guidance was the most important thing, but it wasn't a horror show in terms of the earnings across the board. Let's talk about the VIX, the volatility index. It's dropping, which is obviously a good thing if you're a bull in the markets. You want to see that volatility coming out. If you're a bear, you want to see that thing spike well above 35, and that, of course, will mean absolute detriment to the markets. But at this stage, it's reloading itself. It's coming back down, and that can be seen as a semi-bullish thing in the markets. PCC, that's dropping as well, which means there's suddenly a decent amount of calls being entered into the market rather than puts. We saw an incredible amount of puts over the last 2 weeks, which I think is why we've bottomed in this zone. We'll talk about that later in today's video, but that's dropping back down to basically an equal value, which means there's a bit of harmony, equilibrium between the buyers and sellers moving forward. Let's talk about the dollar index though, and this is something that I think becomes super important. So the DXY has been incredibly bullish. That is, the cash is king momentum kind of trade of 2022 has really been felt. And I think most retail traders believe now cash is king for 2022 so far. Now, when everyone believes something, I start to question it a little bit. But look, the charts show us the way, yeah? So we've got a change of trend on the small time frame. Basically, we had a new peak. We've busted through this last low, and that's putting us in a short, at least here on the 2 hour, 1 hour kind of trade. But what I'm most interested in is this level down here. Now, if this gets smashed and it goes through this zone, which I would expect something like this to occur, and then it pull up and then go down, that's what I'd be hoping for. And calling the top of the DXY would be foolish at this point. We can't know that. But if money's coming out of cash, where's it going? Most likely, it's going into things like bonds and into things like stocks. So there's a good chance that if we end up going underneath these weekly lows here, that we might be seeing a bit of a turn in the dollar, and that money could go on to risk on assets. So remember, the DXY is much more than you consider it. We want to think about that is, if it's moving, is that money going back into the market? Are people feeling a little bit more greedy and able to take that risk on? US 10-year as well is just hovering here. We kind of said at this point we expected it to drop. It has so far dropped from that point, and we expect it probably to reclaim a little bit here and then hopefully drop again. I'd be liking to see that the US 10-year continues to come down, and ideally it won't go back above too much above 3. So we don't really want it above 3. I would like to see that kind of thing occur. And once it takes out that, I'll feel a lot better, because that's the previous demand. I'd feel a lot better about this idea that the US 10-year is turning over. We're very early on this. We'll find out what happens. Now, one interesting thing that's occurred in the last 24 hours has been gold. Gold bounced off our zone that we've had here for a while. This has been our little support area, our demand area between here and these lows. And it actually came into the extreme version of it and just went boom. Some people are going to say, well, I picked the bottom and I bought gold down there. And I don't blame you. Gold's being pretty heavily manipulated towards the downside. But let's have a look at the smaller timeframes here and understand whether it's changed. And I think gold has. Gold's basically made a new low. And for the first time in a while, it's made a new peak. It's basically smashed through this level of supply, and we're at that second zone now. Now, I would expect gold to have a bit of a problem here, unless it's super aggressive. It should most likely short off this zone and come back down, and ideally it would test around just underneath this 1810 and find some nice heavy buying around that area there. So I'm kind of looking for gold to come back, have a bit of a swing, whether it finds 1800 or it finds 1810, and then ideally start to turn towards the upside. Things are looking better on this metal than they have in quite a few days, and that goes for silver as well. Both are starting to improve, And this is the first signs of recovery that we've seen in a while. So a lot of you are going to have something like a trend line as well through there. And you're saying, Tom, I think it's going to short off this zone. And that is totally valid. I get it, absolutely. But remember, if it does something like this, consolidates and then coil breaks, you might want to be paying attention. And we will be here on the channel. So gold's on the watch again. Nice base. At this stage, still is generally short, changed on the smaller time frame, and we'll come back to look at that. Let's move over to natural gas, what's going on there. So natural gas has come back to our 61.8 fib, and between the 61.8 and 78.6, we expected to see gas weaken. It's now in that zone. So it's in an area we're looking now for a change. So what we want to see is this get taken out, and ideally it makes a new peak, and then it dumps straight back through. So probably a breach of this trend line on the downside will be pretty negative here for gas. And I do think that this is a very, very cautious time here for this. Same with oil. If you look at the oil charts, yes, they've broken out. Yes, they look like they're holding, and possibly they are. But I'm not convinced on oil, even though I know it looks good technically, because there's so much shorting that occurs in this exact zone, and similar to natural gas. So be careful there on these charts at this stage. Well, let's get into some stocks. Let's talk about the first one here. Tesla fills the gap. So it basically fills the range that it had previously bounced off. And here's the problem with Tesla right now. It's not so much that it's a technical trade. I think it's a news-based trade. A lot of stuff going on around Twitter, as I mentioned, a lot of stuff going on around Elon Musk. And sometimes Tesla is really great technically. It's one of the best day trading stocks, don't get me wrong. And sometimes it's based on news. And I feel like news is going to rally this stock, and it's really going to be defined by news and less by technicals. If you're looking at it by a pure technical standpoint, you'd say, well, you're in an area that's huge demand and you expect and hope that Tesla can hold this area. But remember, this is the only, or one of the only high PE ratio, PS ratioed stocks in the market that didn't really fall prey to everything else that went on. That is, look at SHOP, not that it's the same stock, but you know what I mean. Look at SHOP, look at the hyper stocks, look at ARK. They all got owned really badly. And this stock has some of the signs I don't like to see. Huge euphoric rallies followed by busts, followed by huge euphoric rallies and busts, and huge euphoric rallies and busts. These types of euphoric rallies and busts tend to be the stages of market decline, okay? And I'm just warning you, I just see this in the chart and it doesn't make me excited about stocks. I don't like it when stocks do this. I've seen it plenty of times play out before in other stocks, and it does tend to be kind of that weakness that you start seeing. So if you think about Moderna and you go back over here, you get these euphoric. Now, obviously this fell a lot faster because, you know, the spread of the idea was over pretty quickly, but there's the euphoric move. You get that huge boom, big bust, and notice there's some serious rallies in between that then led on to weakness later on. And look at Moderna now. I mean, it's really struggling back at 134. So Tesla's not the same. I get that, but I do think that this is not an ideal style of market condition. You don't really expect these types of huge shifts, and this could be the street dumping positions of Tesla. It's been a longly regarded, overpriced stock by many people on the street. I'm not saying again it is, I don't know that, but just be careful here when buying the dip. I think a few people that I know that are huge Tesla bulls have reduced their positions in terms of purchasing DCA. And that's just what they've done. You've got to do what you've got to do. I'm not telling you to do anything in particular, but these stock formations, when you start seeing that, let's see what the comment section does or believes. Do you guys think that Tesla is going to recover very, very well? I mean, obviously this is a demand zone, so this is where it should bounce, and if the market does bounce, or do you think Tesla is now doomed towards something like a 550 or something lower? It's certainly in an area where I expect it to buy up off, but if I'm looking at it technically, it's very tough right now. And I think it's just a word of caution. When you look at a stock like this, at this stage, it's still in sell the rip. Every single time it's come up, it's been fairly aggressively sold, and it's getting sold off more now than other stocks. Let's talk about Apple, long leg doji for Apple. We've got a high and a low, obviously, and an open and a close. Big level here at 148 for day traders. I expect if the market does boom through this, that there's a good chance that it goes back to around that 156 and then find some problems around that 20 moving average on the daily as well. But cool zone for it, and it's still in our heavy demand area where if you look at that on the chart, one thing you don't want to do with Apple is you don't want it underneath here. And at this stage, the street's defending it, and it seems to be doing the right kind of thing. So not too bad here on the Apple's charts. Let's move over to the rest of the world though. Let's start by talking about the DAX, because the DAX is showing some signs of life here. It came off our previous demand, it's bounced, and it's moved into our downward trend. Now you can see how good that downward trend is. My goodness, look how many times this thing has held. Amazing downward trend. So a lot of people probably try to short this, but here's the thing. I think things are changing here on the smaller time frame. Let's have a look now at the 2-hour chart, zoom that in, and think about each time it's touched. So every other time it's come back to this area, it's gone boom and then busted straight back down. Hit it, bang. This time round, however, if you notice, it looks like it's consolidated. It's formed structure on the smaller time frames, and it's potentially accumulating to bust through. This is the first time we've seen structure like this. And if it booms to a new high, it could mean risk on across other markets in the world. Things are looking a little bit better here. We'll have to continue to watch it, but you can see what I'm talking about, yeah? The first time frame change has really happened. The downward trend's there. And at this stage, look at these candles. There's clearly some buying going on at around this zone. So will it bust through to a new high? That's the question. If it does, is that positive? I think it's starting to look much better around the world. Let's move to the Russell. Very similar for that. The Russell is currently consolidating within a tight range. Obviously, it hit a massive low. If you look at this on the charts, this is the last pandemic before pre-pandemic. If we go to the daily here, you'll see it, 2018, 2020. That was the highs. So big role reversal here. Creates a long leg doji. And of course, a breach of the 179.36. A lot standing on this. I mean, if you're a bear on the markets, you want it to go underneath here, fill the gap, 172. Okay, cool. That's what a bear wants for the next trading session. And a bull just wants it to get through here so they can take it back all the way, hopefully, to something like this 189 price. So there's a lot at stake here for IWM, and certainly it's a key zone for it to be watched. Similarly, Nasdaq is very similar. We've got a big zone here, previous kind of resistances at that 13.5 area. A lot of people looking at that. Also 12.9. So let's go down to a 1 hour and think about the structure of this market. So remember we talked about the idea of a potential inverse head and shoulders. Left, head, right. What happens if we snap this area? Coil, movement up, next zone between the 12.8, 12.9. We think there's going to be some resistance. So it should do something like this. Up, probably down, potentially even down to this level, retest, and then hopefully up. Now that's what the bull case wants. That's what the bull case wants. Or it just keeps going up and it goes really strong. The bear case wants to bust this level down. Once you get underneath here, where's the logical conclusion? Fill the gap, possibly even retest the lows. So there's a good next 24 hours here in the markets in terms of a fight between the bulls and the bears going on in this little box range here. And I think that's worthwhile having on the charts, understanding that this is what the markets are trying to do. S&P 500 shows that the best. When we were doing the market analysis in the last 24 hours, we talked a lot about this zone here. So this is a 15-minute S&P, the real market. So this is the real market. I just want to show you this again, guys. Here's the movement, the inverse head and shoulders. Obviously, the breach range, we're looking for that kind of level to be taken out. If you want to know what that is, about 4,050. The next zone becomes 4,150. And let me show you how I find 4,150. So a bit of it's got to do with volume profiling. So you can see here the volume profile, even if you don't see this area, notice there's a lot of orders sitting around this zone. It becomes the most likely area. So I popped it in here about 4,023. At that point, I expect resistance. What happens? It forms resistance and it starts structuring up. Now, if you watched the live stream yesterday, I talked about this being a defense zone right here. It was perfect. It doesn't mean every day it's going to be great and perfect like this, but look, we were right yesterday and we talked about this zone and we talked about the defense of this area, and that is what happened. You can go back, watch the video if you'd like. But that was the area that we expected the market to defend. Now what we're hoping for, if we're a bull on this market, we're hoping for a break of the 4,050, and then the next zone we're expecting is 41. Now, why are we expecting 41? Because when you start zooming it in, you'll notice there's a lot of volume around that 4150. That is There's a huge amount of orders that are probably sitting in there. Supply. There's a lot of other reasons I could go into, but yeah, it's a key pivotal zone. The next zone after that, obviously 4,300. So these are the main block areas that you look at when a market's going up. This zone, everything in here usually is probably noise. And then from this zone to this zone, everything in here is probably noise. So that's what you're hoping for. Bears, it's pretty simple. Bust it down, take out this level, a little bit of a rally probably ensues, take out the gap. And that will take you down to around 39.20 again, where the gap closes. So this is the bear case. The bull case just wants a break above here, and then a potential move to the 41.50. Both cases, very cool, and hopefully that helps to understand this market, which can be mad right now. Let's talk about the close of the day. Close pretty much on the max pain for the options. Let's have a look now at the 18th, which is the next expiry in a few days' time. We've got a 403 max pain again. That could change, but basically where the current price is. And then let's have a look at the 20th. So this is funnily enough, the Friday. Now that's coming down. It was at 428, but remember, maximum pain for the market, that is if they wanted to expire and make the most amount of money out of all the expirations in the market, is 426. We aren't near that yet. But what did we talk about before? We talked about that 429, 430 area. Now, depending on how this goes, I'd expect that to climb down as we get more puts and calls opened. But what if we hit like a 415 at the end? And that's where max pain is. Watch it on the daily, it'll change. And it could give you a little bit of an insight into where the market's going to sit by the end of the week. But certainly one to have on your charts. Bitcoin, nice base formation forming here, much better than it has been. At least it's stabilizing. And you go into the smaller time frames and you can see it's making a series of higher lows. That's technically a good thing, showing a bit of demand. It's got a huge resistance here at 32. So that's a massive zone for it. And I would expect that if 32 is breached, there's a good chance that we're in actual recovery rally at that point. That doesn't mean that Bitcoin's going to the moon or anything, guys. Don't expect that. I've said for a while, I think we're in crypto winter, unfortunately. But with BTC shorts also reducing, which means that the shorts are coming out of the market a little bit, there's a good chance that this will turn. If you haven't already, come and follow us at FX Evolution on Twitter or in our Discord community. Public link down below and private link subscription if you're interested down below. And of course, in terms of the economic news coming out, you need to be aware you have some things moving forward. So we've got core retail sales here coming out Tuesday. Will this turn the market? Retail sales here, 8:30 a.m. Big deal. It's going to move the market an hour before open New York time. And then we have the Papa Powell himself. No doubt the market's coiling for a reason. The news. And on top of that, let's see what Fed Chair Powell has to say. I don't like it when he comes out. I just wish he would never come out, never talk. He should just go become reclusive. That would be much better. Go hide somewhere in the basement. And realistically, Fed Chair Powell, when he comes out, the markets will move depending on what he says. So turnaround Tuesday is very potential here. Now, whether that's turnaround bear or bull, we don't know. We have a tight range, and we know that if we breach zones, most logical next steps we've seen today. Thanks so much for watching. If you enjoyed the video, please subscribe, smash that like button, guys. We appreciate it. And thanks so much also for taking us to 100K. I'll be doing a giveaway when we get to 100K as well. So if you do subscribe, all you need to be is a subscriber and comment when we get to the 100K. So we'll announce more things soon, but we're getting there and I do appreciate it. Bye for now.